Hello, hello, everyone. So good to see y'all. And now the sun is still out. Last time for part one, the sun was gone. And then by the time we got off, it was like super gone. So appreciate y'all being on with us. Okay, it is 6:03 and we only have 30 minutes. So we're going to jump right into it. And we'll probably have friends joining us throughout the entire presentation. But we are also recording this, so we'll have it sent out to everyone and we'll have it on OWA socials and websites soon. Um, but just a really quick intro. Hi, my name is Anna. I use she, her pronouns. I'm the director of policy and campaigns at Ohio Women's Alliance Action Fund. And we're so excited to be with Policy Matters Ohio. This is our second iteration in our budget series. So in our first one, our part one, we went through Budget 101. What is the budget? Why is it important? And then today, Bailey is going to chat with us about taxes. And taxes get a really bad rep, but we were just talking about how like they're not so bad. We kind of need them. Um, so part one is already up on our website if you want to go back and see that. But we will be sharing out the slides at the end of this, along with our recording. And if you have any questions throughout, feel free to throw them in the chat. Feel free to come off mute and ask them, and we will get them answered for you. So without further ado, I will throw it over to Bailey.
Thank you, Anna. Hello, everyone. My name is Bailey Williams. I am the tax policy researcher at Policy Matters Ohio. Very excited to spend a little bit of time with everyone this evening to talk a little bit about taxes, and particularly state taxes. So I will share my screen with our little slideshow here, and we will get going. Perfect. So if we're all good there. So Ohio tax policy and the state budget. Well, a little bit before that, Policy Matters Ohio, who we are. We're a nonprofit policy research institute doing nonpartisan research that is centered on creating a more vibrant, equitable, sustainable, and inclusive Ohio through research, strategic communications, coalition building, and policy advocacy. So I do a lot of our tax policy research and advocacy on the state and local level. And I will talk about tax revenue and the GRF, the General Revenue Fund, which is the state's main operating budget. That's where most of our state tax revenue dollars go. So a little overview, a little agenda. I'll give an overview of state and local taxes, a brief history of state tax policy, and then how tax policy and the state budget going on right now, the state budget being debated right now, kind of intersect. So that's kind of where we're going. And like Anna said, please feel free to throw your questions in the chat and or feel free to come off mute at any point. So why do state taxes matter? They pay for a whole host of things. Mostly or chiefly, they pay for primary and secondary public education. They pay for the lion's share of that. They help offset some of the costs of local property taxes through things like the homestead exemption. They help pay for Medicare or Medicaid, which provides health insurance for over a quarter of Ohioans. And they help give direct aid to libraries and local governments. But when we talk about taxes, it's important to note that not all taxes are built the same. Not all of them are felt equally across populations. And when we're looking at a particular tax, there are a couple of factors to keep in mind when evaluating it. One might be the tax rate levy. I think that's one thing that people are probably most familiar with. Like, what's the percentage of the tax I'm paying on this? What is being taxed? Is it income, or is it a good or a service, or is it my property that is being taxed? Who's most likely to pay a particular tax for things like taxes on sports gambling? Obviously, if only people who are gambling are going to be impacted by that tax. What's the share of income an individual is paying across all types of taxes? I'll get more into that in just a second. And of course, then what's the purpose of a tax? Of course, the main reason is to raise revenue, but that's not the only reason that we tax or use tax policy. We can use it to deter certain behaviors, like that gambling tax I just mentioned, that's a kind of sin tax that we throw on to certain behaviors to deter them, make them more expensive, and make people less likely to uptake that type of behavior. We can also use the tax code to spend using various tax breaks and tax credits. I'll touch on that at the end. But as a framework, we can generally think of taxes in one of two ways, either regressive or progressive. And I'll touch on that and I'll get onto that in more just a second. I keep saying with several of these elements. But the key point here is how we generate our revenue, how we raise our revenue is just as important as how we spend that. Let's dive into that. What should we expect from our tax code? As I said, just how we raise our tax revenue is just as important as we spend it. Taxes are the cost of uh it's the price we pay to live in a civilized society. It's the price we pay for security, for education, for our health. That's the price we pay to not live in anarchy. How we spend those tax dollars reflects our societal priorities, like I said, just as much as how we raise that revenue. So when we're thinking of our tax system, we should expect it to adhere to two basic principles: adequacy and equity. For the adequacy point, does our tax code raise enough revenue to meet all the basic needs of the members of our society? Do we have enough to meet everybody's basic needs? That's the first point. The second, the equity point, does our tax code ask everyone to contribute their fair share to ensure our collective prosperity of our collective society? We all benefit from this society. We should all pay a fair share to ensure our collective prosperity in that society. So keep that framework in mind as we go along and analyzing individual taxes and seeing how those fit into our overall tax system. So back to taxes can be generally described as regressive or progressive. Regressive tax is a type of tax that increases the tax rate as the amount subject to that taxation decreases. Another way to put that is the less money you have, the higher rate you will pay. Sales taxes and to a lesser degree the property tax impose higher rates on those with lower incomes. But how's that possible? Let's take the sales tax, for example. Everyone in Ohio pays the same sales tax, the same 5.75% sales tax. Let's use that as an example to see how regressive taxation works. So let's imagine that two people or three people are buying the same $100 basket of goods. All of those goods in that $100 basket are subject to that sales tax. So each of these three people will be paying $5.75 in taxes. We can see that that amount paid in taxation will consume a higher amount of an individual's income the less they have of it. And we can see this by demonstrating three different income levels. The less income I have, starting with $500, we can see that that 5.75% sales tax and the tax that I paid, that's taking up 1.15% of my income. But as it increases, that rate will decrease. And that is illustrated here in the graph. As the richer I am, the less I will pay effectively in the effective tax rate through the sales tax. The richer I am, the less I will pay. This is an example of how regressive taxation, or of an example of regressive taxes. And the sales tax is a very, very regressive tax. So the opposite of regressive is a progressive tax, which increases the tax rate as the amount subject to taxation increases. In another way, the more income, this is primarily implied in the income tax. So the more income you have, the higher income tax rate you will pay. So income taxes with graduated tax brackets are the best example of this. So we can use an example, again, going to Ohio's income tax brackets to see how a graduated income tax taxes those with higher earners. So here's an example with two individuals with different incomes. I didn't list out the 50,000, but I included it in the graph for the visualization's point, but the effect is still the same. As we see, if you earn $75,000 versus $120,000, and we can apply that to Ohio's two tax brackets. We only have two after two generations of gradually whittling away at the income tax. These are our current two remaining tax brackets. So you would pay a 2.75% tax on any income between $26,050 up to $100,000, and then 3.5% on anything above $100,000. So with the example for 750,000, because I don't make anything above, I don't make above 100,000, that amount in between 200 or $26,050 and $75,000. So at $48,000, that is how much I'm paying that 2.75% sales tax or income tax on. And that gives me an effective tax rate or a total tax rate on my income paid of 1.79%. I'm only paying tax on 1.79% of my income, not the tax bracket rate of 2.75%. Now let's see that apply to those with incomes above 120,000. You can see that they will pay 2.75% on all of their income in between $26,050 and 100,000. So that roughly $74,000, they will pay 2.75% on that, which is a little over $2,000. From that, that income above $100,000, they will pay 3.5% on that 20,000. So, which is just $700. So they will pay $2,700 or 2.23% of their total income and taxes. A total or not a total 3.5% tax that is their top tax bracket that they're in. They're not paying 3.5% on all of their income. But as we can see, higher tax or those with higher incomes are paying higher tax rates. This is an example of a progressive tax. I know that was a good bit of information. Do we have any questions so far over progressive and regressive taxation? Seeing none, I think we're good. So we'll keep moving. So now that we have that basis, what does Ohio's tax system look like? Where do we get most of our tax revenue? Is our tax system regressive or progressive? How does our tax system treat or tax people of varying incomes? So let's get into it. Where do my tax dollars go? So I'll talk a little bit about state governments, but the main focus will be on local governments, but the main focus will be on state governments. So these two types of governments rely heavily on three forms of taxation: the income tax, sales and use tax, and the property tax. The income tax is mostly used by state governments, but municipalities and school districts can enact local income taxes. The sales tax, again, the main sales tax that we pay or we experience is the state sales tax of 5.75%, but county governments and transit authorities can levy their own. All 88 counties levy a sales tax ranging from 0.5% to 2%, and 11 transit authorities levy sales taxes ranging from 0.1% to 1%. And then there's property taxes. All property tax revenue in the state of Ohio is local. Not a dime in property tax revenue goes to the state. So all of this goes to schools and other local entities like libraries or mental health services. That being said, the state does control the property tax system of which the locals have to operate in. So the state has a great amount of influence over the types of taxes locals can levy. They also can provide direct property tax relief. As I mentioned the homestead exemption earlier, this is the main form of property tax relief that the state offers. So those are our three main forms of revenue. And this is how they make up our general revenue fund, like I said, our main operating budget. So three taxes account for the overwhelming lion's share, three types of taxes. So we get almost 50% of our revenue from the sales tax, which again, it's a regressive tax that's consuming a higher share of income for lower earning Ohioans. We get a little over a third of our GRF revenue from the income tax. It's our main tax based on your ability to pay. And then there's only two taxable brackets remaining after 2 decades of income tax cuts. I'll get into that in just a second. And then the commercial activity tax is kind of a weird one. This is our main form of business taxation that exists in Ohio. We don't have like a corporate profits tax. We have a gross receipts tax. It's kind of a hybrid between a sales tax and an income tax. But these three taxes account for over 90% of our state revenue in fiscal year 2024, which was roughly $28 billion, just a little bit under there. For a bit of context, here's how our state tax revenue changed from fiscal year 23 to 24. We can see a little bit of the fiscal picture that the state is in. So as we can see at the bottom of the table, total tax revenue actually declined from fiscal year 23 to 24. And that's before taking into account inflation adjustment. So this 2794 is not only lower nominally, it's a significantly lower purchasing power compared to that 2892 we brought in fiscal 23. So what was the main driver for that decline in overall tax revenue? It's income tax cuts. In our last budget bill, an HB 33 passed in 2023, the state passed budget busting, in my opinion, budget busting income tax cut that is now amounting to over $1 billion in foregone tax revenue. As we see, we dropped from $10.8 billion brought in fiscal year 23 to just 9.5 brought in fiscal year 24. So in Ohio, we keep cutting the income tax. That's been a feature ever since I've been paying attention to state politics, and that's been going on far longer than that. So what kind of effect has that had on our overall equity side of our tax revenue? It's kind of clear that our we're lacking in the adequacy part of our tax revenue portion or tax revenue principles because we keep cutting revenue and it's we don't have basic revenues to afford the goods and services we need. And we're also failing on the equity point. As we can see here, our tax system is incredibly upside down. The top 1% of earners only pay 6.3% of their income, of their overall income in taxes, whereas the bottom 20% are paying twice that share. They pay 12.7% of their income in taxes. The main driver for that is our over reliance on the sales tax. We've cut the income tax so much over the last 2 decades and shifted that tax or that the our tax reliance on the income tax on the sales tax so much that it has created this upside down tax structure. So as I've been kind of alluding to, we've been cutting our taxes so much for the last 20 years. Let's look into that. How did we get here? What exactly have we been doing? And in Policy Matters, we dubbed that the Great Ohio Tax Shift. So a couple of highlights of our tax reforms that we've undertaken since 2005. There have been several massive changes to our tax structure. We've cut tax rates in the income tax 5 times, eliminated 7 brackets, eliminated our corporate franchise tax, which is our corporate profits tax, and replaced it with a commercial activities tax. That's our shrinking reliance on the income tax. We've shifted that burden onto that sales tax by increasing our state sales tax. We've increased our cigarette tax, increased our gas tax, and created this new sports gambling revenue tax. There are other taxes that we've, of course, created, like the cannabis tax, that aren't expressly included in the Great Tax Shift that we analyze, but we see a large shift towards sales taxes in order to subsidize these income tax cuts. We've made some property tax changes that are important, but it's more important on the local side and kind of out of the scope for the state budget. But for some historical context, these are what our state tax brackets used to look like. In 1984, this was the tax year with the highest top marginal rates. We used to tax income above $100,000 in 1984. I think this is above $230,000 now. You would pay 9.5% on income above that. Before the start of our Great Tax Shift, you used to pay 7.5% on income above $200,000 as recently as 2004. We had several progressive tax brackets to ensure that the rich paid their fair share, and we have now whittled that down to just 2 tax brackets. That has resulted in this. A generation of income tax cuts has far outweighed any revenue gained or generated from aggressive tax alternatives. Since 2005, the cumulative impact of our tax changes are $13 billion in foregone revenue. That's if we had not cut taxes at all, our state tax code would bring in $13 billion more today each year. We're giving that up mostly in income tax cuts. All of that benefit, almost all of that benefit has gone to the top 1%. For those with incomes above almost $650,000, they've seen an average tax cut of $52,000 per year. On average, that's what they're getting. Meanwhile, earners in the lowest bracket are paying more in their state and local taxes because of that shift towards regressive taxation, that shift in sales tax. We rely so much on the sales tax to the point that we are now making lower income individuals shoulder more of that tax burden. That's the consequences of of 20 years of tax cuts. Whereas somebody making the median income in Ohio, which is right around, I believe, $64,000 a year, you're getting an average tax cut roughly of $352 a year. That's $30 a month. That's not making anybody in the middle class richer. That's not helping them significantly at all. They can afford a tank of gas a month. That's not helping the middle class. This is just a handout to the wealthy, plain and simple. Here's a representation of a shift in our tax revenue. In fiscal year 2004, the last year before this great tax shift, we got not the majority, but the plurality of our state tax revenue from the income tax. Today, we now get majority of it from the sales tax. This is the first year that the sales tax has made up majority of our revenue since we created the income tax in 1971. We are now decided as a state that we should rely more on regressive taxation to give a tax cut to the wealthy. That is what our lawmakers are prioritizing for our state tax code. And it's harming equity and it's harming adequacy, plain and simple. So that's a brief history, and I know we're running out of time, so I'd love to burn through these last couple of slides for the taxation expectations for the budget. So to fund our budget, as I've been getting at, we need to protect and expand our revenue sources, and that starts with protecting the income tax. Lawmakers have been pushing to eliminate both the personal income tax and the commercial activity tax. The current House proposal that was released yesterday doesn't include an income tax cut, but the Senate has been hell-bent on including one. So that's something to look out for. That's something Policy Matters is pushing back on. Relying on sources of sin taxes of like sports gambling and cannabis raises many issues. The governor's proposal saw several increases on regressive taxations like the cigarette tax or the marijuana tax. But these revenue sources are very small compared to what we're losing in the income tax. That's $1 billion cut just from the income tax changes we made last budget. And I believe in last fiscal year, the sports gambling tax just brought in 150 million. So it's pennies on the dollar at this point. And as I said, and they're highly regressive. So we're going to ask more lower income individuals to pay a higher burden or a higher share of their income into taxation, or can we ask the rich to pay their fair share? I think that's probably the best choice. Finally, on property taxes, they'll play some role in the budget. We don't know exactly where lawmakers will land on. The governor didn't say anything on it, and the state has put a terrible tax policy proposal in that would essentially make school districts provide property tax relief by tapping into the rainy day funds. Policy Matters will have more on that in a bit, but we're still kind of digging into the proposal as it was released yesterday, but it's not great tax relief. What we at Policy Matters are advocating for on a tax revenue platform, it can be centered into three priorities. One is protecting and expanding the income tax. Two is making the tax system more equitable and less regressive. We can do that by protecting the income tax and then enacting targeted tax relief through tax credits, refundable tax credits. And three, we can generate revenue to pay for fair school funding education, for Medicaid, for those tax credits by eliminating tax expenditures to the wealthy and special interest groups. So I'll burn through this real quick. I'm trying to get through the end. Hopefully we'll have a little bit of time for questions at the end, but what's a tax expenditure? A tax expenditure is just a tax break. When people talk about expenditures or loopholes, it's a tax break. It's really just the name of it and how you want to kind of sell it. But in Ohio, we spend, thinking of tax expenditures or tax breaks as spending, we spend $11 billion annually on tax expenditures, and that's over a third of our state tax revenue. But that doesn't go into our revenue estimates at all. And so, as I was saying, that like a tax expenditure or a break or a loophole can be spun, or depending on how you're presenting it, is that a tax expenditure is not inherently problematic. Policy Matters supports certain tax breaks, tax expenditures like um, prescription drugs. You don't have to pay the sales tax on prescription drugs. That makes prescription drugs cheaper, more affordable. That's a good thing for people who need it. But there are, and the earned income tax credit is a great example of a tax credit, a tax break, a tax expenditure that we support and want to expand. But there are also bad ones, like if you have business income, you can exempt $250,000 of that income from state taxation. That's ridiculous. That's what the LLC loophole is. If you buy a timeshare and a private jet, you get a sales tax exemption for that. Thank you, Ohio lawmakers. If you're buying investment uh, gold coins and bullion, you get a tax break for that. Thank you, Ohio lawmakers, for prioritizing that. That costs about 10 to 15 million dollars each year. So, depending on your perspective, a tax expenditure can do one of two things. A new targeted form of spending through the tax code, that's a positive thing, like a child tax credit, for example. We should enact a state child tax credit. Or we can look at tax breaks to eliminate, to raise revenue. Like let's eliminate that timeshare for private jets to raise $20 million for childcare, for example. We can do that. And that's what Policy Matters proposes is doing a combination of both. And our tax expenditure report that was just released shows we're now in the future 2 years, we'll be spending $13 billion on our tax expenditures. Just food for thought. And our last slide is a highlight of our revenue summary that is on our website. Our tax proposal will raise just under $4 billion to greatly fund education, child tax credits, Medicaid, a whole host of things that you can see on our website and our budget platform. But overall, we would raise $2.6 billion just by having the wealthiest 3% of Ohioans pay just 2% of their income in taxation, and an additional 2% of their income. 97% of Ohioans would not pay an extra dime, an extra cent in state income taxes with taxing incomes above 250,000. But it would be a huge revenue raiser. We can also tax corporate income and raise another $2 billion. Eliminating bad tax expenditures like that LLC loophole that I had mentioned earlier could raise another $1 billion, and we can use some of that money to fund good tax expenditures. We can fund our property tax relief proposal that would go to renters, homeowners, seniors, those facing loss of income, and gentrifying neighborhoods, all inclusive property tax relief measure that doesn't ask school districts to pay for it. We also propose a child tax credit and a refundable EITC that would give a tax relief directly to workers and parents in Ohio. So that's a highlight of our tax revenue platform. I know we're at 6:30. That's my presentation. Thank you all for listening to me talk about taxes. That was a lot of information in a very short amount of time. So thank you all. I'm happy to stay on for as long as Anna will have me to answer questions that folks may have.
Absolutely. Thank you so much. I just love taxes so much. And for everyone, I threw in the chat the proposed budget that came out yesterday. It's like they very like digging deep into repro stuff. They're wanting to remove $1,000 from child tax credits. They want to create $750 in tax deductions for CPCs. And if folks don't know what CPCs are, they're basically fake abortion clinics, and they will set up shop right next to actual abortion clinics. And they're faith-based. There are no actual doctors or nurses that are there. And really, they're just there to prey on folks, and will not give any actual information on all options that folks have. And if you didn't know, your tax dollars already go towards funding those CPCs. And this budget that's been proposed is actually going to increase it to the most that they've ever received of $10 million per year. And Ohio, we talked about this in part one, but Ohio's budget is a 2-year budget. So they, in this budget, would receive $20 million. But there is one question in the chat, Bailey. Is there a state that stands out as having a much better tax policy?
Yes, I love this question because it gets to show, or it allows me to show off the research that I get to rely on. Not that I did, my friends and partners get to produce. There's a wonderful report that the Institute on Taxation and Economic Policy puts out. I will share the link to the report in the chat that so people have that. It's called their Who Pays report, and it analyzes all states' tax systems and measures them based off how regressive and progressive they are. The slide that I showed with Ohio's slide about how regressive our tax system is, that is directly from this ITEP data. So a state that does it pretty well, in my opinion, is Minnesota. Minnesota has a strong income tax bracket, several robust brackets. They have a very strong refundable EITC and child tax credit. I cannot talk about Minnesota enough and their child tax credit. It's the most valuable one in the country. In my opinion, a great model for the entire country and one that Ohio should adopt. And it shows that Midwest states in particular can have these strong progressive tax codes that invest in working people.
I love Minnesota. And if I'm not mistaken, I think Minnesota and Ohio are very similar in just about any demographic you could think of, right? Like,
Several different, yeah, absolutely. If they can do it, we can do it as well. We got to match it. We got to bring that energy down here.
amazing. Okay, folks. Any other last minute burning questions?
I had a last minute question about like, I know that there's a federal debt, like a national debt that we have, but does each state have a debt like that too?
Great question. So it would depend on each state, but most states are constitutionally, in their state constitutions, are prohibited from incurring large amounts of debt like the federal government can. State government can't deficit spend like the federal government does. We can issue bonds in certain instances, but that's capped at just 5% of state tax revenue. So just 5% of 28 billion. So not to the level we can't federal deficit spend like the federal government can. Some states might be able to, they might have a little bit of flexibility just depending on their constitution.
Thank you.
Yeah.
Amazing. Okay, we're only 6 minutes over time, and I have to say, for like a 30-minute presentation, that's really good. Okay, amazing. It is still light out. I hope everyone goes out, takes a little walk, has a wonderful dinner. Um, And yeah, we're around out. Like I said, I'll be sending out these slides, videos, um, and maybe like a little survey for our part one and part two folks about a potential panel that we'll put together to hear about some folks whose organizations heavily rely on the budget. So be on the lookout for that. And yeah, feel free to share the slides and videos with anyone you know who might be interested. And again, thank you so much for being here. We love chatting about the budget and taxes and all the things. But I will let folks hop off. Me and Bailey will be here if you have any questions, but have a wonderful night.
Thank you
Thank
all.
you. Night, guys.
Thank you. Take care.